Question 1. Can you spot the customer accounts answer when the clue is a restricted activity that generally requires firm rules and approval? Option A. Borrowing from a customer. Option B. Using a limit order. Option C. Reading a prospectus. Option D. Receiving a dividend. The correct answer is option A. Borrowing from a customer. Borrowing from a customer is heavily restricted because it creates conflicts and supervision concerns. Receiving dividends, using limit orders, and reading prospectuses are ordinary investor activities. Question 2. Which exam-tested phrase in customer accounts is linked to a person the firm may contact about possible exploitation or account concerns? Option A. Beneficial owner only. Option B. Bond trustee. Option C. Trusted contact person. Option D. Syndicate manager. The correct answer is option C. Trusted contact person. A trusted contact can help firms address account concerns such as possible exploitation. Beneficial owners, trustees, and syndicate managers have different meanings. Question 3. Does documentation showing who may trade for a corporate account point to which SIE tested answer in customer accounts? Option A. Option premium. Option B. Corporate account resolution. Option C. Proxy card. Option D. Birth certificate. The correct answer is option B. Corporate account resolution. A corporate account resolution identifies authorized persons for a corporate account. Birth certificates relate to individuals, proxy cards handle voting, and option premium is the price of an option. Question 4. Imagine a test item says placing a retail customer's interest ahead of the representative's interest. What is the best customer accounts answer? Option A. Regulation best interest. Option B. Rule 144. Option C. MSRB Rule G17. Option D. Regulation T. The correct answer is option A. Regulation best interest. Regulation best interest requires broker-dealers and associated persons to act in a retail customer's best interest when making recommendations. Regulation T covers credit, Rule 144 covers restricted and control stock, and MSRB Rule G17 is a municipal fair dealing rule. Question 5. Pick the SIE term connected to tax bracket and tax status considered before recommendations in customer accounts. Option A. Proxy status. Option B. Tax status. Option C. CUSIP status. Option D. Trade status. The correct answer is option B. Tax status. Tax status is a KYC factor that can affect recommendations. Trade, proxy, and CUSIP status do not describe the customer's tax profile. Question 6. Which answer would pass an exam day check for identifying and addressing conflicts in a retail recommendation in customer accounts? Option A. Conflict obligation. Option B. ETF redemption. Option C. Bond accretion. Option D. CTR filing. The correct answer is option A. Conflict obligation. Reg BI includes obligations around conflicts of interest. CTR filings, bond accretion, and ETF redemption are separate topics. Question 7. A short customer accounts question says a separate cash limit within SIPC customer protection. Which option wins? Option A. SIPC cash sublimit. Option B. Treasury PAR guarantee. Option C. Municipal tax guarantee. Option D. Unlimited cash insurance. The correct answer is option A. SIPC cash sublimit. SIPC coverage has a customer protection limit with a smaller cash sublimit. It is not unlimited cash insurance, a Treasury PAR guarantee, or a municipal tax guarantee. Question 8. Which exam-tested phrase in customer accounts is linked to a representative sharing gains or losses without required conditions and approval? Option A. Rights of accumulation. Option B. Transfer on death. Option C. Joint tenants with survivorship. Option D. Improper sharing in a customer account. The correct answer is option D. Improper sharing in a customer account. Sharing in a customer account is restricted and generally requires proper approval and proportional sharing. Joint tenancy is an ownership form, transfer on death names beneficiaries, and rights of accumulation are fund discounts. Question 9. How should a candidate classify the amount a margin customer borrows from the broker-dealer in customer accounts? Option A. PAR value. Option B. Debit balance. Option C. Market value. Option D. Credit balance. The correct answer is option B. Debit balance. Debit balance is the loan amount owed in a margin account. Credit balance can appear in short accounts, market value is current value, and PAR value is face value. Question 10. A candidate sees cash coverage being part of the overall SIPC protection amount during customer accounts review. What should they choose? Option A. Bond coupon limit. Option B. ETF expense limit. Option C, cash sublimit. Option D, unlimited cash coverage. The correct answer is option C, cash sublimit. SIPC cash protection is subject to a sublimit within the overall protection amount. The other choices are not SIPC coverage rules. Question 11. During customer accounts practice, what does an adult managing securities for a minor under UGMA or UTMA describe? Option A, joint account. Option B, custodial account. Option C, corporate account. Option D, numbered account. The correct answer is option B, custodial account. A custodial account is opened for a minor with an adult custodian under UGMA or UTMA. A corporate account belongs to a business, a numbered account is identified by number, and a joint account has multiple adult owners. Question 12. Which answer would pass an exam day check for an order requiring prompt handling without time price discretion in customer accounts? Option A, not held order. Option B, GTC order. Option C, discretionary order. Option D, held order. The correct answer is option D, held order. A held order must be handled promptly under the customer's instructions. A not held order gives time and price discretion, GTC describes duration, and a discretionary order allows broader trading decisions only with authorization. Question 13. Which choice best matches a customer losing money because securities declined in value on a customer accounts question? Option A, MSRB loss payment. Option B, no SIPC market loss coverage. Option C, full SIPC reimbursement. Option D, FDIC stock insurance. The correct answer is option B, no SIPC market loss coverage. SIPC does not protect customers from ordinary market losses. FDIC stock insurance and MSRB loss payments do not cover declining securities prices either. Question 14. Suppose the exam stem says one fee covering advisory services and transaction costs. Which customer accounts answer is strongest? Option A, breakpoint schedule. Option B, SIPC advance. Option C, wrap fee program. Option D, bond ladder. The correct answer is option C, wrap fee program. A wrap fee program charges one fee for advisory and related services. Breakpoints, bond ladders, and SIPC advances are unrelated. Question 15. How should a candidate classify a margin account credit line created by excess equity in customer accounts? Option A, statement of additional information. Option B, separate account. Option C, suspicious activity report. Option D, special memorandum account. The correct answer is option D, special memorandum account. Special memorandum account reflects borrowing power created by excess equity in a margin account. A separate account supports variable products, SARS and AML filing, and SIE supplements a mutual fund prospectus. Question 16. Which customer accounts answer is hidden inside the clue, a standard identifier used to distinguish securities? Option A, voting instruction. Option B, dividend date. Option C, CUSIP number. Option D, annuity unit. The correct answer is option C, CUSIP number. A CUSIP number identifies a particular security issue. Dividend dates relate to distributions, voting instructions relate to proxies, and annuity units measure variable annuity payouts. Question 17. Choose carefully in customer accounts, paying for a securities purchased by the settlement date defines which term? Option A, dividend declaration. Option B, proxy delivery. Option C, cash account payment requirement. Option D, bond call. The correct answer is option C, cash account payment requirement. Cash account purchases must be paid for by settlement under normal rules. Dividend declarations, proxy delivery, and bond calls do not describe payment for purchases. Question 18. Which choice best matches authorization allowing someone to act for another person on an account on a customer accounts question? Option A, warrant. Option B, power of attorney. Option C, proxy statement. Option D, trade confirmation. The correct answer is option B, power of attorney. Power of attorney authorizes a person to act for an account owner. Proxy statements solicit shareholder votes, trade confirmations report completed trades, and warrants are rights to buy stock. Question 19. Look closely at excessive trading mainly to generate commissions. Which customer accounts answer should be selected? Option A, selling dividends. Option B, marking the close. Option C, free riding. Option D, churning. The correct answer is option D, churning. Churning is excessive trading in a customer account to generate compensation rather than serve the customer. Marking the close manipulates closing prices. Free riding involves selling before paying in a cash account, and selling dividends misleads fund buyers near a distribution. Question 20. Which customer accounts answer is hidden inside the clue? A customer receiving trade details after a cash account transaction? Option A, proxy statement. Option B, trade confirmation. Option C, official statement. Option D, Form U5. The correct answer is option B, trade confirmation. A trade confirmation gives transaction details after a trade. Proxy statements, official statements, and Form U5 serve different disclosure or registration purposes. Question 21. Suppose the exam stem says a brokerage account requiring full payment without borrowing. Which customer account's answer is strongest? Option A, cash account. Option B, margin account. Option C, options account. Option D, discretionary account. The correct answer is option A, cash account. A cash account requires customers to pay in full for purchases by settlement. A margin account uses borrowing, a discretionary account allows approved trading authority, and an options account is approved for options activity. Question 22. A quickfire customer accounts video asks about a person firms may contact about suspected exploitation or diminished capacity. Which answer fits? Option A, market maker. Option B, control person. Option C, beneficial owner. Option D, trusted contact person. The correct answer is option D, trusted contact person. A trusted contact person may help a firm address suspected financial exploitation or account concerns. A beneficial owner enjoys ownership benefits, a control person has issuer influence, and a market maker quotes buy and sell prices. Question 23. If a customer account stem gives only purchasing limited by available cash rather than loan value, which answer is safest? Option A, short credit balance. Option B, margin buying power. Option C, cash buying power. Option D, SMA buying power. The correct answer is option C, cash buying power. Cash buying power comes from available cash. Margin buying power, SMA, and short credit balances belong to margin accounts. Question 24. Can you spot the customer account's answer when the clue is papers identifying trustee authority for a trust account? Option A, sinking fund notice. Option B, municipal official statement. Option C, tombstone ad. Option D, trust account documents. The correct answer is option D, trust account documents. Trust account documents confirm who has authority to act for the trust. Official statements disclose municipal offerings, tombstone ads announce offerings, and sinking fund notices concern bond retirement. Question 25. Why would joint owners whose shares pass through their estates lead to one specific customer account's answer? Option A, JTROs. Option B, Todd account. Option C, margin account. Option D, tenants in common. The correct answer is option D, tenants in common. Tenants in common allows a deceased owner's share to pass through the estate rather than automatically to the survivor. JTROs transfers to the survivor, Todd transfers to a named beneficiary, and margin account describes borrowing. Question 26. Pick the SIE term connected to using sale proceeds before they have settled in customer accounts. Option A, accrued interest. Option B, unsettled funds issue. Option C, SIPC advance. Option D, breakpoint discount. The correct answer is option B, unsettled funds issue. Using unsettled funds in a cash account can create violations if handled improperly. Accrued interest, breakpoints, and SIPC advances are unrelated. Question 27. Choose carefully in customer accounts. A broker-dealer recommendation standard focused on the retail customer's best interest defines which term? Option A, SIPC rule. Option B, Investment Company Act only. Option C, MSRB markup rule. Option D, Regulation Best Interest. The correct answer is option D, Regulation Best Interest. Regulation Best Interest applies to broker-dealer recommendations to retail customers. Investment Company, SIPC, and MSRB markup rules do not define this standard. Question 28. A short customer accounts question says protection when a broker-dealer fails and customer securities are missing. Which option wins? Option A, SIPC protection. Option B, SEC performance guarantee. Option C, MSRB guarantee. Option D, FDIC insurance. The correct answer is option A, SIPC protection. SIPC protection applies when a broker-dealer fails and customer assets are missing. FDIC covers bank deposits, MSRB does not guarantee investments, and the SEC does not guarantee performance. Question 29. Which customer account's answer is hidden inside the clue? An account that should not carry a broker-dealer loan balance? Option A, maintenance excess. Option B, credit spread. Option C, debit balance. Option D, no debit balance. The correct answer is option D, no debit balance. Cash accounts are not designed to carry a debit balance from broker-dealer lending. Debit balances and maintenance excess are margin concepts, while credit spread is a debt or options term. Question 30. Which customer accounts concept separates a client disclosure document explaining advisory services, fees, and conflicts from the other choices? Option A, margin call. Option B, option agreement. Option C, official statement. Option D, advisor brochure. The correct answer is option D, advisor brochure. An advisor brochure discloses advisory services, fees, and conflicts to clients. Official statements, option agreements, and margin calls are unrelated. Question 31. After reading sale proceeds becoming available after settlement, which customer accounts concept should not be confused with distractors? Option A, maintenance margin. Option B, conversion value. Option C, initial margin. Option D, settled cash proceeds. The correct answer is option D, settled cash proceeds. Settled cash proceeds are available after the trade settles. Initial margin, maintenance margin, and conversion value are different calculations. Question 32. A SIE Customer Accounts item describes a brokerage firm liquidation rather than an issuer bankruptcy. Which answer fits? Option A, broker-dealer failure. Option B, municipal default. Option C, issuer default. Option D, corporate earnings miss. The correct answer is option A, broker-dealer failure. SIPC is tied to broker-dealer failure and missing customer assets. Issuer default, municipal default, and earnings misses are investment risks. Question 33. If a customer account stem gives only an account managed by someone legally acting for another person, which answer is safest? Option A, short account. Option B, prime brokerage account. Option C, cash account. Option D, fiduciary account. The correct answer is option D, fiduciary account. A fiduciary account is controlled by someone with legal authority to act for another, such as a trustee or guardian. Cash account only describes payment, prime brokerage serves institutional trading needs, and short account refers to short positions. Question 34. How should a candidate classify a written statement alleging a sales practice violation in customer accounts? Option A, trade confirmation. Option B, QZIP request. Option C, customer complaint. Option D, tombstone ad. The correct answer is option C, customer complaint. A customer complaint is a written allegation of misconduct or sales practice concern. Trade confirmations report transactions, tombstone ads announce offerings, and QZIP requests identify securities. Question 35. A SIE Customer Accounts item describes an order giving the broker time and price discretion. Which answer fits? Option A, market order. Option B, held order. Option C, day order. Option D, not held order. The correct answer is option D, not held order. A not held order gives the broker discretion over time and price but not over the security, side, or size. A held order must be handled promptly, a market order prioritizes execution, and a day order only sets duration. Question 36. Pick the SIE term connected to a liquidation process using a trustee to return customer property in customer accounts. Option A, proxy committee. Option B, SIPC trustee process. Option C, underwriting syndicate. Option D, transfer syndicate. The correct answer is option B, SIPC trustee process. A SIPC liquidation may involve a trustee working to return customer property. Syndicates and proxy committees have different roles. Question 37. Where does buying and selling securities before paying for the purchase fit inside customer accounts review? Option A, selling away. Option B, free riding. Option C, churning. Option D, front running. The correct answer is option B, free riding. Free riding occurs when a customer buys and sells without paying for the purchase. Churning, front running, and selling away are different prohibited practices. Question 38. When customer accounts review mentions commodity futures contracts outside normal SIPC securities protection, which term applies? Option A, no SIPC futures coverage. Option B, SIPC bond coverage. Option C, SIPC stock coverage. Option D, SIPC cash coverage. The correct answer is option A, no SIPC futures coverage. SIPC focuses on securities and cash and brokerage accounts, not ordinary commodity futures contracts. Stocks, cash, and bonds may be within the normal customer asset framework. Question 39. When customer accounts review mentions how long a customer expects to invest before needing the money, which term applies? Option A, X date. Option B, settlement date. Option C, time horizon. Option D, maturity only. The correct answer is option C, time horizon. Time horizon is part of understanding a customer's investment profile. Ex-dates, settlement dates, and maturity are not the same as a customer planning period. Question 40. Does employment status and occupation collected for the profile point to which SIE tested answer in customer accounts? Option A, bond indenture. Option B, proxy form. Option C, employment information. Option D, ETF basket. The correct answer is option C, employment information. Employment information is part of the customer profile. Indentures, proxy forms, and ETF baskets are not KYC profile facts. Question 41. Which customer accounts clue points to matching a recommendation to a customer profile? Option A, market making. Option B, suitability. Option C, underwriting spread. Option D, ex-dividend timing. The correct answer is option B, suitability. Suitability focuses on whether a recommendation fits the customer's investment profile. Market making quotes securities, underwriting spread compensates distribution of new issues, and ex-dividend timing concerns dividends. Question 42. If a customer account stem gives only authorization that continues if the account owner becomes incapacitated, which answer is safest? Option A, limited partnership. Option B, options agreement. Option C, durable power of attorney. Option D, good till cancelled order. The correct answer is option C, durable power of attorney. Durable power of attorney generally remains effective if the person becomes incapacitated. Limited partnership is an investment structure, options agreement approves options trading, and GTC is an order duration. Question 43. Identify the tested customer accounts concept behind how soon a customer may need cash from investments. Option A, QZIP needs. Option B, voting needs. Option C, liquidity needs. Option D, coupon needs only. The correct answer is option C, liquidity needs. Liquidity needs are part of understanding the customer. Coupon needs, voting needs, and QZIP needs are not the standard KYC factor. Question 44. Which customer accounts concept separates wrongfully taking or using customer funds or securities from the other choices? Option A, hypothecation. Option B, redemption. Option C, reinvestment. Option D, conversion. The correct answer is option D, conversion. Conversion is the wrongful use or taking of customer property. Hypothecation pledges securities in a margin account, reinvestment uses income to buy more securities, and redemption is selling fund shares back to the issuer. Question 45. Suppose the exam stem says verifying a customer's identity before or soon after opening an account, which customer account's answer is strongest? Option A, customer complaint file. Option B, confirming disclosure statement. Option C, continuing education plan. Option D, customer identification program. The correct answer is option D, customer identification program. A customer identification program requires firms to collect and verify identifying customer information. A complaint file records grievances, a disclosure statement explains risks or conflicts, and continuing education trains registered persons. Question 46. Where does firm with customer relationships that uses another firm for clearing fit inside customer accounts review? Option A, bond counsel. Option B, clearing firm. Option C, transfer agent. Option D, introducing firm. The correct answer is option D, introducing firm. An introducing firm opens and services customer relationships while a clearing firm handles back-office functions. Transfer agents maintain ownership records and bond counsel provides municipal legal opinions. Question 47. After reading a document letting shareholders vote without attending the meeting, which customer accounts concept should not be confused with distractors? Option A, account statement. Option B, trade confirmation. Option C, prospectus. Option D, proxy statement. The correct answer is option D, proxy statement. A proxy statement provides information for shareholder voting and allows voting by proxy. A prospectus describes a securities offering, a trade confirmation reports a trade, and an account statement summarizes account activity. Question 48. Under SIE conditions, how should joint owners where the survivor receives the account assets be labeled in customer accounts? Option A, tenants in common. Option B, custodial account. Option C, joint tenants with right of survivorship. Option D, transfer on death. The correct answer is option C, joint tenants with right of survivorship. Joint tenants with right of survivorship means the surviving owner receives the deceased owner's interest. Tenants in common allows each owner's share to pass to an estate. Todd names a beneficiary, and a custodial account is for a minor. Question 49. Which answer would pass an exam day check for periodic reporting of positions and balances in a customer account in customer accounts? Option A, tombstone ad. Option B, account statement. Option C, prospectus only. Option D, Rule 144 notice. The correct answer is option B, account statement. Account statements summarize account holdings and balances. Prospectuses, tombstone ads, and Rule 144 notices are different documents. Question 50. A quickfire customer accounts video asks about entity maintaining shareholder records and processing transfers. Which answer fits? Option A, investment advisor. Option B, market maker. Option C, transfer agent. Option D, underwriter. The correct answer is option C, transfer agent. A transfer agent maintains ownership records and processes securities transfers. An underwriter distributes new issues, a market maker quotes securities, and an investment advisor gives compensated advice. Question 51. Before recording a lesson on customer accounts, which term explains updating customer information when circumstances change? Option A, bond call notice. Option B, ETF creation. Option C, stock split filing. Option D, customer profile update. The correct answer is option D, customer profile update. Customer information should be updated when relevant facts change. Stock split filings, bond call notices, and ETF creation are separate securities processes. Question 52. During customer accounts practice, what does a representative choosing trades after written customer authorization describe? Option A, custodial account. Option B, cash account. Option C, discretionary account. Option D, numbered account. The correct answer is option C, discretionary account. A discretionary account allows a representative to decide trading details only after proper written authorization and firm approval. A cash account only describes payment, a custodial account belongs to a minor, and a numbered account identifies by number but does not itself grant discretion. Question 53. Where does protection if a broker-dealer fails and customer assets are missing fit inside customer accounts review? Option A, bond rating guarantee. Option B, FDIC insurance. Option C, SIPC protection. Option D, market loss insurance. The correct answer is option C, SIPC protection. SIPC protects customers if a broker-dealer fails and securities or cash are missing, subject to limits. FDIC insurance covers bank deposits, market loss insurance is not provided, and bond ratings do not guarantee repayment. Question 54. After reading pledging customer margin securities as loan collateral, which customer accounts concept should not be confused with distractors? Option A, hypothecation. Option B, breakpoint sale. Option C, churning. Option D, wash sale. The correct answer is option A, hypothecation. Hypothecation is the pledging of customer securities as collateral for a margin loan. Churning is excessive trading, breakpoint sale is an improper mutual fund practice, and wash sale is a tax loss rule. Question 55. What should stand out in a customer account stem about documenting how much investment loss a customer can accept? Option A, risk tolerance. Option B, syndicate spread. Option C, coupon rate. Option D, QZIP number. The correct answer is option A, risk tolerance. Risk tolerance is a key customer profile fact for recommendations. Coupon rates, QZIP numbers, and syndicate spreads are product or offering details. Question 56. A quickfire customer accounts video asks about customer shares missing from the records of a failed broker-dealer. Which answer fits? Option A, dividend preference. Option B, tax loss claim. Option C, missing securities claim. Option D, market loss claim. The correct answer is option C, missing securities claim. SIPC protection is aimed at missing securities and cash at a failed firm. Market losses, tax losses, and dividend preferences are not the same claim. Question 57. Which answer would pass an exam day check for documentation showing authority for a partnership account in customer accounts? Option A, ex-dividend calendar. Option B, QZIP. Option C, prospectus. Option D, partnership agreement. The correct answer is option D, partnership agreement. A partnership agreement helps establish who may act for a partnership account. A prospectus discloses an offering, QZIP identifies a security, and ex-dividend calendar relates to dividends. Question 58. Which customer accounts clue points to the minimum equity a long margin account must keep? Option A, loan consent. Option B, sales charge. Option C, maintenance margin. Option D, initial margin. The correct answer is option C, maintenance margin. Maintenance margin is the minimum equity that must remain in a margin account after purchase. Initial margin applies at the time of purchase, sales charge is a fund cost, and loan consent allows securities lending but is not the equity minimum. Question 59. Which exam-tested phrase in customer accounts is linked up to $500,000 of brokerage protection including $250,000 cash? Option A, SIPC coverage limit. Option B, FDIC standard deposit limit. Option C, MSRB markup limit. Option D, Reg T margin limit. The correct answer is option A, SIPC coverage limit. SIPC coverage is commonly tested as up to $500,000 per separate customer, including a $250,000 limit for cash. FDIC limits apply to bank deposits. Regulation T covers margin credit, and MSRB markup limit is not the tested protection figure. Question 60. Can you spot the customer account's answer when the clue is a customer's background with securities and products? Option A, investment experience. Option B, syndicate experience. Option C, transfer agent experience. Option D, issuer experience. The correct answer is option A, investment experience. Investment experience helps determine what products may be appropriate. Issuer, transfer agent, and syndicate experience are different roles. Question 61. Before recording a lesson on customer accounts, which term explains an account registration naming beneficiaries for death transfer? Option A, discretionary account. Option B, transfer on death account. Option C, margin account. Option D, DPP account. The correct answer is option B, transfer on death account. A transfer on death account lets assets pass to named beneficiaries outside probate. A margin account uses credit, a discretionary account grants trading authority, and a DPP account holds partnership interests. Question 62. Does a brokerage account allowing a customer to borrow from the broker-dealer point to which SIE tested answer in customer accounts? Option A, margin account. Option B, custodial account. Option C, transfer account. Option D, cash account. The correct answer is option A, margin account. A margin account allows a customer to borrow part of the purchase price from the broker-dealer. A cash account requires full payment, a custodial account is for a minor, and transfer account is not the standard SIE account type. Question 63. Can you spot the customer account's answer when the clue is firm handling comparison, clearance, and settlement functions? Option A, clearing firm. Option B, issuer. Option C, rating agency. Option D, introducing firm. The correct answer is option A, clearing firm. A clearing firm handles operational settlement functions behind trades. An introducing firm has the customer relationship, an issuer sells securities, and a rating agency evaluates credit quality. Question 64. What should stand out in a customer account stem about a centralized securities depository supporting book entry settlement? Option A, investment advisor. Option B, MSRB. Option C, OFAC. Option D, depository trust company. The correct answer is option D, depository trust company. The depository trust company supports centralized custody and book entry settlement. The MSRB writes municipal rules, OFAC administers sanctions, and an investment advisor provides compensated securities advice. Question 65. If a customer account stem gives only compensation tied to investment gains under advisory rules, which answer is safest? Option A, bond coupon. Option B, performance-based fee. Option C, markup. Option D, sales load. The correct answer is option B, performance-based fee. Performance-based fees are advisory compensation tied to results and are subject to rules. Coupons, loads, and markups are different compensation or income items. Question 66. A short customer accounts question says aligning advice with a client's objectives and constraints, which option wins? Option A, client suitability for advice. Option B, issuer underwriting. Option C, proxy tabulation. Option D, market making. The correct answer is option A, client suitability for advice. Advisory recommendations should fit the client's objectives and constraints. Underwriting, market making, and proxy tabulation are different activities. Question 67. A short customer accounts question says mixing customer securities with firm securities improperly, which option wins? Option A, annuitization. Option B, breakpoint. Option C, commingling. Option D, diversification. The correct answer is option C, commingling. Commingling customer and firm assets improperly violates customer protection principles. Diversification spreads risk, breakpoints reduce sales charges, and annuitization creates income payments. Question 68. A quick-fire customer accounts video asks about ongoing compensated advice rather than mainly trade execution. Which answer fits? Option A, transfer agent role. Option B, broker-dealer execution role. Option C, investment advisor role. Option D, issuer role. The correct answer is option C, investment advisor role. Investment advisors are associated with compensated advice. Broker-dealers mainly affect securities transactions, transfer agents keep ownership records, and issuers create securities. Question 69. Which answer would pass an exam day check for a duty to put the client's interests ahead of the advisor's interests in customer accounts? Option A, market making. Option B, suitability only. Option C, firm commitment. Option D, fiduciary duty. The correct answer is option D, fiduciary duty. Investment advisors are associated with a fiduciary duty to clients. Suitability only is a lower broker-dealer standard, market-making quotes securities, and firm commitment is underwriting. Question 70. Before recording a lesson on customer accounts, which term explains a dispute resolution process often used for customer-broker disputes? Option A, annuitization. Option B, arbitration. Option C, underwriting. Option D, hypothecation. The correct answer is option B, arbitration. Arbitration is a formal dispute resolution process used in the securities industry. Underwriting distributes new issues, annuitization converts annuity value to payments, and hypothecation pledges margin securities. Question 71. If a customer account stem gives only authority to make investment decisions for a client account, which answer is safest? Option A, transfer authority only. Option B, voting authority only. Option C, issuer authority. Option D, discretionary authority. The correct answer is option D, discretionary authority. Discretionary authority allows decisions in a client account under proper authorization. Voting, issuer, and transfer authority do not describe advisory discretion. Question 72. Identify the tested customer accounts concept behind holding or having access to client funds or securities. Option A, coupon custody only. Option B, syndicate custody. Option C, custody of client assets. Option D, proxy custody only. The correct answer is option C, custody of client assets. Custody means holding or having access to client assets and creates regulatory obligations. The other choices do not describe advisory custody. Question 73. A SIE customer accounts item describes improperly promising a customer they cannot lose money. Which answer fits? Option A, diversification. Option B, guaranteeing against loss. Option C, dollar cost averaging. Option D, hedging disclosure. The correct answer is option B, guaranteeing against loss. Guaranteeing a customer against loss is improper because securities involve risk. Diversification reduces but does not eliminate risk, hedging can limit certain risks, and dollar cost averaging is an investment method. Question 74. If a customer account stem gives only entity that helps prevent an issuer from issuing too many shares, which answer is safest? Option A, general partner. Option B, dealer. Option C, registrar. Option D, custodian. The correct answer is option C, registrar. A registrar helps confirm the proper number of shares outstanding. A custodian safeguards assets, a dealer trades from inventory, and a general partner manages a partnership. Question 75. Suppose the exam stem says protection that does not guarantee investment value. Which customer accounts answer is strongest? Option A, no performance guarantee. Option B, guaranteed yield. Option C, guaranteed tax result. Option D, guaranteed profit. The correct answer is option A, no performance guarantee. SIPC does not guarantee profits, yields, or investment value. It is a customer asset protection system for failed broker-dealers. Question 76. What should stand out in a customer account stem about coverage tied to accounts at member broker-dealers? Option A, insurance policy claim. Option B, SIPC member firm account. Option C, commodity pool only. Option D, bank savings account. The correct answer is option B, SIPC member firm account. SIPC protection applies through member broker-dealers. Bank accounts, insurance claims, and commodity pools are not the core SIPC customer account coverage. Question 77. Under SIE conditions, how should using reasonable diligence and care when making a recommendation be labeled in customer accounts? Option A, care obligation. Option B, registration termination. Option C, custody only. Option D, dividend election. The correct answer is option A, care obligation. The care obligation requires reasonable diligence and care in recommendations. Custody, termination, and dividend elections do not describe this reg by requirement. Question 78. Does disclosing material municipal facts available at the time of trade point to which SIE tested answer in customer accounts? Option A, stock split notice. Option B, time of trade disclosure. Option C, option exercise notice. Option D, post-annuitization disclosure. The correct answer is option B, time of trade disclosure. Time of trade disclosure requires municipal dealers to disclose material facts known or reasonably accessible. The other notices belong to different products or events. Question 79. Which customer accounts clue points to a customer losing money because a recommendation performed poorly? Option A, MSRB reimbursement. Option B, FDIC reimbursement. Option C, full SIPC protection. Option D, no coverage for bad investment advice. The correct answer is option D, no coverage for bad investment advice. SIPC does not cover losses from bad advice or poor investment performance. FDIC and MSRB reimbursement do not cover that securities loss either. Question 80. Where does coverage potentially applying separately to different account capacities fit inside customer accounts review? Option A, same CUSIP capacity. Option B, separate customer capacity. Option C, same coupon capacity. Option D, same dividend capacity. The correct answer is option B, separate customer capacity. SIPC coverage may be applied by separate customer capacity. CUSIPs, dividends, and coupons do not define customer capacity. Question 81. Imagine a test item says a municipal securities dealer dealing fairly with customers. What is the best customer accounts answer? Option A, fair dealing rule. Option B, wash sale rule. Option C, short sale rule. Option D, Reg T call. The correct answer is option A, fair dealing rule. MSRB fair dealing requires municipal dealers to treat customers fairly. Wash sale, short sale, and Regulation T rules concern other areas. Question 82. Look closely at a customer paying the full purchase price rather than borrowing from the firm. Which customer accounts answer should be selected? Option A, discretionary account. Option B, short account. Option C, cash account. Option D, margin account. The correct answer is option C, cash account. A cash account requires the customer to pay the full purchase price. Margin accounts involve borrowing, short accounts involve borrowed securities, and discretionary accounts involve trading authority. Question 83. During customer accounts practice, what does collecting investment objectives, risk tolerance, income, and net worth describe? Option A, bond indenture. Option B, proxy ballot. Option C, customer investment profile. Option D, trade confirmation. The correct answer is option C, customer investment profile. KYC requires collecting and understanding the customer profile before recommendations. Confirmations, bond indentures, and proxy ballots are unrelated documents. Question 84. During customer accounts practice, what does learning a customer's financial profile before recommendations describe? Option A, stabilization. Option B, know your customer. Option C, best execution. Option D, market making. The correct answer is option B, know your customer. Know your customer means gathering and updating customer information needed to service the account and make recommendations. Best execution concerns trade handling, market making involves quoting securities, and stabilization supports a new issue price. Question 85. After reading the document gathering customer identity and investment profile details, which customer accounts concept should not be confused with distractors? Option A, new account form. Option B, trade confirmation. Option C, proxy statement. Option D, tombstone ad. The correct answer is option A, new account form. The new account form collects key information needed to open and supervise an account. A trade confirmation reports execution details, a proxy statement supports voting, and a tombstone ad announces an offering. Question 86. Why would bank deposit insurance not covering stocks or bonds lead to one specific customer account's answer? Option A, FINRA insures bank accounts. Option B, FDIC does not insure securities. Option C, SIPC guarantees market gains. Option D. MSRB pays failed broker claims. The correct answer is option B. FDIC does not insure securities. FDIC insurance applies to eligible bank deposits, not securities such as stocks, bonds, or mutual funds. SIPC does not guarantee market gains, FINRA is not a bank insurer, and the MSRB does not pay customer claims after broker failure. Question 87. A quick-fire customer accounts video asks about the usual 50% initial equity requirement for buying stock on margin. Which answer fits? Option A. Rule 144. Option B. SIPC rule. Option C. Regulation T. Option D. MSRB Rule G37. The correct answer is option C. Regulation T. Regulation T sets the initial margin requirement for many securities purchases, commonly tested at 50% for stocks. SIPC rules protect customers after firm failure. MSRB Rule G37 covers municipal political contributions, and Rule 144 governs restricted and control stock resales. Question 88. How should a candidate classify a customer relationship summary for retail investors in customer accounts? Option A. Form CRS. Option B. Form 10K. Option C. Form U4. Option D. Form U5. The correct answer is option A. Form CRS. Form CRS gives retail investors a relationship summary. Form U4 and U5 relate to broker registration, while Form 10K is an issuer annual report. Question 89. During customer accounts practice, what does a document sent after a securities transaction showing trade details describe? Option A. Prospectus. Option B. Form U5. Option C. Account agreement. Option D. Trade confirmation. The correct answer is option D. Trade confirmation. A trade confirmation shows important execution details after a transaction. A prospectus discloses offering information, an account agreement sets account terms, and Form U5 reports termination from a firm. Question 90. Which answer would pass an exam day check for returning customer securities held in street name after a firm liquidation in customer accounts? Option A. Customer asset return. Option B. Bond call. Option C. Issuer buyback. Option D. Prospectus refund. The correct answer is option A. Customer asset return. SIPC liquidation aims to return customer securities and cash when a brokerage firm fails. Issuer buybacks, prospectus refunds, and bond calls are separate processes. Question 91. For customer accounts practice, which option turns a demand to deposit cash or securities when equity is too low into the correct term? Option A. Margin call. Option B. Trade confirmation. Option C. Dividend notice. Option D. Proxy request. The correct answer is option A. Margin call. A margin call requires a customer to add equity when margin requirements are not met. Dividend notices involve distributions, trade confirmations report executions, and proxy requests relate to voting. Question 92. Look closely at firm approval based on customer information before options trading. Which customer accounts answer should be selected? Option A. Automatic approval. Option B. Options account approval. Option C. FDIC review. Option D. Issuer consent. The correct answer is option B. Options account approval. Options trading requires firm approval based on customer information and risk suitability. Automatic approval is wrong. Issuers do not approve customer options accounts, and FDIC review applies to bank deposit insurance. Question 93. A short customer accounts question says the minimum equity needed to open a margin position. Which option wins? Option A. Maintenance margin. Option B. Initial margin requirement. Option C. Accrued interest. Option D. Sales load. The correct answer is option B. Initial margin requirement. Initial margin is the equity required when a margin position is opened. Maintenance margin is ongoing minimum equity, accrued interest applies to bonds, and sales load is a mutual fund charge. Question 94. A short customer accounts question says customer age affecting suitable investment time horizon and needs. Which option wins? Option A. Customer age. Option B. QZIP age. Option C. Bond age only. Option D. Issuer age only. The correct answer is option A. Customer age. Customer age is part of the customer profile. QZIP, bond age, and issuer age are not the KYC factor described. Question 95. Choose carefully in customer accounts. A firm not pledging fully paid cash account securities for a margin loan defines which term? Option A. Short sale borrow. Option B. Call protection. Option C. No hypothecation of fully paid securities. Option D. Full hypothecation. The correct answer is option C, no hypothecation of fully paid securities. Fully paid cash account securities are not pledged for a customer margin loan. Hypothecation and short sale borrowing are margin concepts, while call protection is a bond feature. Question 96. Which exam-tested phrase in customer accounts is linked to selling securities bought with unsettled funds before those funds settle? Option A, wash sale. Option B, market manipulation. Option C, tender offer. Option D, good faith violation. The correct answer is option D, good faith violation. A good faith violation can occur when securities bought with unsettled funds are sold too soon. Wash sales, manipulation, and tender offers involve different rules. Question 97. For customer accounts practice, which option turns learning essential facts about a customer before opening or servicing an account into the correct term? Option A, know your customer rule. Option B, option parity rule. Option C, SIPC liquidation rule. Option D, MSRB issuer rule. The correct answer is option A, know your customer rule. KYC focuses on learning essential facts about the customer and account. SIPC liquidation, MSRB issuer rules, and option parity do not describe account opening due diligence. Question 98. Which customer accounts clue points to supervisory review and approval required for certain account activity? Option A, customer signature only. Option B, issuer approval. Option C, SIPC filing. Option D, principal approval. The correct answer is option D, principal approval. Principal approval means a qualified supervisor reviews certain actions under firm rules. Customer signature alone may not be enough. Issuers generally do not approve brokerage accounts, and SIPC filings concern broker-dealer failure protection. Question 99. Which answer would pass an exam day check for limited protection for missing securities and cash at a failed brokerage firm in customer accounts? Option A, FDIC bank limit. Option B, issuer guarantee. Option C, SIPC coverage limit. Option D, unlimited market protection. The correct answer is option C, SIPC coverage limit. SIPC provides limited protection for missing customer assets when a brokerage firm fails. It does not provide unlimited market protection, FDIC bank coverage, or issuer guarantees. Question 100. Imagine a test item says brokerage held securities registered in street name for customers. What is the best customer accounts answer? Option A, direct municipal issuer. Option B, bearer only annuity. Option C, cashier check. Option D, street name securities. The correct answer is option D, street name securities. Street name securities are commonly held by broker-dealers for customers. The other choices do not describe normal brokerage custody.